Hello, everyone. I trust you're all doing well. Okay, so this is a quick update on GBPUSD, as you can see on my screen. This is a quick update on GBPUSD on the current situation of GBPUSD. So you can also use this as future reference to know how to do your chart analysis. All right. But for those of you who are actively following me, you can use this as an update to know the direction of the market for the week ahead. Today is Saturday and the market doesn't open, but we're just doing an analysis for the week ahead. Today is Saturday, 7th February 2026. So this is the current status of GBPUSD. But if you're coming up here to find this video much after now, you can still use it so you can know how to analyze your chart and to be able to know the direction of the market whenever you're trading. As many of you already know, I'm mostly focused on GBPUSD because I'm a firm believer that it's best to just trade one currency pair. Most people trade multiple pairs, but for me personally, I like to stick to one pair. It helps me to build patience, it helps me to build consistency, it helps me to build mastery, you know. Yeah, so most people they trade more than one pair and they're still profitable, right? So, but for me, I just like to stick to one pair. All right, it helps me to build mastery, consistency, understanding, and I just love it. I just enjoy it. So we're gonna start by doing a top-down analysis. So I'll go straight to the monthly time frame so that we can have a holistic view of the market. Now, here's one thing I want us to understand about GBPUSD and for most currency pairs, right? It's usually stable, because right now you're dealing with a whole country economy. So trading GBP USD simply means you're trading two currencies. You're trading the British economy and you're trading the US economy. And it's usually stable. The movement is quite stable, as you can see. It's almost like a range. If you look at your chart now, you see that we're almost like it's a range. It's not almost. If you look at it in a monthly time frame, this is a range. All right, this is a range. That's to tell you that both economy since 2017, because this chart is from 2017. Since 2017, the relationship between GBP USD has just quite been stable. Unlike when you check other charts, you see um, some striking moves, like it goes up. Like when you check gold, you can just see an uptrend for the longest time. When you trade US 30, you see a very long trend. When you check GBP JPY, you see a very long trend. But for GBP USD, you can see that it's more like a range, which means both economy has just been moving side by side. So for a currency like GBP USD is best for scalping. Yes, I'll say that it's best for scalping, although you can still swing, but in a lower time frame, all right? You can still swing, but not as much as you can swing gold. You can swing US 30, you can swing GBP, JPY. For GBP USD, it's more like a quick scalp, if you really want to benefit from GBP USD. GBP USD is a quick scalp. If you're swinging, as a matter of fact, GBP USD is very good for day trading. I would say that you can swing trade, but the movement is quite very stable. So for day traders, I think GBP USD is actually very, very good, for quick in and out, considering the nature of the market. As you can see, it's more like a range and a higher time frame. So this is the monthly time frame. So if you look at this monthly time frame for us to be able to predict the direction of the market, you would see that GBPUSD has broken above this current level, closed above it. First of all, it closed above it, came back, a little pullback. Of course, we already know that uh, price movement does not just move as a straight line. It moves in a zigzag motion, either upward zigzag or downward zigzag. In the sense, it moves higher high, higher low, higher high, higher low, higher high, higher low. That's how it moves. So as you can see on the monthly time frame, GBPUSD broke above this previous high, came in from a higher low, and now we're going back up. So from the monthly time frame, it is safe to say that GBPUSD is on a bullish move. What this simply means is that the British pounds is gaining power over the US dollar. So from what we've been able to gather here on the monthly time frame, it is safe for us to say that GBPUSD is going up. So that's just for that. We use the monthly for direction. So like Google Map shows us where we should be looking at. It gives us a clear direction of price action where we should potentially be looking at the market going towards so that we know how to strategically place trades. So we'll move down now to, with that being said, knowing the direction of the market from a monthly time frame, we would now go to the weekly time frame. This is the top down approach in a nutshell, going from the higher time frame and moving slowly down to the lower time frame. All right. So as you can see, we already plotted this key level from the monthly time frame, and it's still very much valid for our weekly time frame. So there's really not much difference between the monthly and the weekly time frame. For a day trader, we're still using this for our direction. As you can see, it's even clearer, and we can see all the waves properly. As you can see, yeah. So we're still very bullish. As you can see, price broke above this level, came down, and then boom, we have a bullish engulfing candle. Boom, further telling us that hey, we are going to the upside. So the reason why we have this yellow line here is just to demarcate from where 2025 ended. This is just for my personal use to understand that okay, 2026 started from here. So this is all that's been happening since 2026. Now we will move down to the daily time frame to see what's happening on the daily time frame. So don't mind all these things you see here. I'm going to explain why I have them here because this is my personal chart. So, like we already saw in the monthly and the weekly time frame, GBP USD is on the bullish move. So, practically, I'm just trying to show us the direction of the market so that we know what to be looking at for because it is always very important that you know the direction of the market before even looking for an entry. All right. Once you have that clear understanding of, okay, I need to be looking for a buy setup, it just makes your trading way more easier than when you come to the market, you're not even sure if you should be looking for a buy or if you should be looking for a sell. So that's the reason why it is very important that you use the top down approach, the top down analysis to be able to determine the direction of the market, which is exactly what we're doing now. And the good thing is you can use this for any pair. So as you all can see that price from we saw from the weekly time frame, okay, yeah, so price broke above this level. Practically, we're looking at a break and retest strategy because price just goes higher, high, higher, low, higher, high, higher, low. So as you can see, price broke above this region, came back and is retesting it. Now, the reason why you see this is a rejection here. You see, this is a daily time frame. Price went up, came back down, and then we see a rejection. So the reason why you see me put a fake out here is because when you draw your Fibonacci from swing low to swing high, you'll find out that this is our Fibonacci level. This is our Fibonacci level. You see that this candle closed inside this Fibonacci zone, and then the wick came out. So if you go down to the lower time frame, you might not understand what just happened here. All right, because when you go to a lower time frame, you're gonna see a candle close above this level, and that might deceive you to feel like, oh, price is going to continue to come down, not knowing that it was just a fake out. So the daily time frame gives you a clear understanding of what happens here. All right, so this was a fake out because this candle closed inside this 50% Fibonacci retracement zone. So, which means we're still very much anticipating a buy. So that's why you see me put here fake out. And then let's take away this Fibonacci because I want us to use pure price action for this analysis. So, and then you see here, I say actual Fibonacci support level. In other words, this is the actual support level where price closed for the retracement. All right. So, yeah, we're still very much anticipating a buy. So we will scroll down now to the 4 hour time frame. As you guys can see, we're using the top down approach to do our analysis from monthly to the weekly to the daily, and now we are at the 4 hour time frame. So, like I was explaining on the daily time frame, you can see that the same candle that we saw on the daily that had a rejection around this area, you can see that it's not showing as a rejection here. So that's why it's always very good that you do your analysis from the higher time frame to the lower time frame so that you can have a clear understanding of what is happening, because the lower time frame does not really give you the information that you need to be able to understand the direction of the market. The lower time frame is basically for entries, while the higher time frames gives you clear direction. So with the information we've been able to gather from the higher time frame as well as the daily time frame, I already know that okay, whatever is happening around this side, this zone here was just a fake out. Except, of course, maybe price continues to come down, break so much above this level, and then maybe the daily candle closes above this level where you see this fake out here, and then we can start looking for a sell. But as it stands now, we're still very much bullish. And then from this 4 hour time frame, this is where we now start anticipating an entry. All right. So what I am practically anticipating here now, as you can see, is we're waiting for price to break this counter trend line. Once the 4 hour candle closes above this counter trend line, then we'll entry for a buy, and then we'll put our take profit here. But before then, we're still expecting that price will bounce off of this region, come down, bounce up, but it's gonna dance a little bit around this place before it finally breaks it. All right. But while that is happening, you can see that we have another perfect setup inside this place. All right. Price broke above this support, right, which is now our resistance, came down here, came to test it. So as you guys can see, I'm already anticipating a buy here once the market opens. So this is break and retest. So we're anticipating a quick buy, a quick sell here, sorry, you get. We're anticipating a quick sell here because we have, if you use your Fibonacci, you will see that this is a perfect Fibonacci zone. All right. You have your break, retest, Fibonacci zone, and then as well your uh, resistance zone here. So this is a perfect setup. This is a very good setup. All right. So, but we're not just gonna get in like that. we're waiting for this bearish candle to engulf this bullish candle here. We want to see this bearish candle close above, sorry, below this green candle, and then we can then probably scale down to the 15 minutes time frame. And if you scale down to the 15 minutes time frame, you will see that we already have a break of a range here, and it can potentially come back and retest, and then you get in, put your stop loss above this place, and then we ride it down to this next zone here. As you can see here, we have um, a level here, so we can just do this quick 1 to 2. All right, while we are waiting for our major take for buy opportunity. So this is just us taking quick scalp, because we trade just one pair. We understand the move and we can take trades while we're waiting for the major move. So we do a quick scalp here. Whatever happens here, we just do a quick scalp. Then when our 4 hours candle break above this counter trend line, then we can take a major buy to the upside. So that is it for now for GBPUSD. But for some of you who don't want to, who don't want to take this quick scalp, yeah, patience is the key. You can just wait for price to dance around how it wants here, then break this counter trend line, and then you can just get in. You can just get in. Once price breaks there, you get in, and then you can ride up to this place. This can give you Um, if you adjust this a little bit more, this can give you up to 1 to 3 risk reward. All right, so that is it for GBPUSD in a nutshell. If you have any questions, drop it in my comment section, and I would respond to every one of them. If you want to join my Telegram group for free signals, it's also in my bio. And then if you need one-on-one training, you can also contact me either through my Instagram or through Telegram. So that's it for GBPUSD for now. Until my next video, you guys have a great time. Bye for now.